conjunction with Biz Talk Today TV and Crosscheck Media. Welcome everyone to Buy, Hold, Sell. I am your trader, Todd Schoenberger, and I am joined by my friend and co-host, Tobin Smith, out in hot and stifling Scottsdale, Arizona. Tobin, I saw it's 104 degrees out there right now.
PK's saying hello. PK's saying hello. This is right after his 11 to 1:30 nap, so he's pretty going right now.
Well, don't let that cat outside; it might fry. But with us today is a very special guest. We're so happy to have him on Buy, Hold, Sell for his very first appearance. It's Jeff Macke, partner at Wall Street Beats. Welcome, Jeff, to Buy, Hold, Sell.
Thank you. It's great to be here, Todd. Good to see you, man. It's good to see both of you guys. Been a while.
Cheers to you. Been a while.
It has been way too long. Absolutely. Jeff, I'm going with you on this one. We got to talk about the markets. Clearly, stocks all week long have just been kind of in a holding pattern, waiting for that all-world, all-important jobs report coming out tomorrow. It's the most important jobs report since last month, of course. But at Wall Street expectations are at 190,000 right now. But who cares about it? Because after that's released, nobody really cares. All they're focused on is the Fed. But right now, has this market surprised you at all in 2024?
I mean,
he's in San Diego, Todd, but you don't have to yell. He can hear you. Okay.
I can hear you just fine. It's chill here, man. It's not 104 degrees. I get to go outside. I can come and go freely. The June gloom's got me fine. I don't think this market's so bad. I mean, the Dow's up 3%. This is not a screaming, irrational, nutty thing. There's always pockets of the market that are batshit, and you know, I'd be disappointed if there weren't. Imagine how boring it would be. But in terms of the overall tape, it seems relatively constructive. You know, we've got a lot of focus on the Fed, a lot of chitter chatter. Tomorrow, as you say, is going to be the biggest number in the history of the world until 5 seconds after it's released, at which point everyone will forget it and no one will give a crap. I like my bullish catalysts kind of ambiguous and out there ways. And so I think that's been your best upside kind of idea going on in this market. Once they start cutting, once they start raising, once the Fed starts doing much of anything other than saying we're data dependent and running their mouths for 90 minutes and a presser every once in a while, then you got problems. Then you have to start adjusting your models. But in this holding pattern right now, you know, we're kind of in, it's not Goldilocks. It's a dark version of Goldilocks anyway. You know, I mean, we got a potential stagflation thing going on. We got a little bit of Fed possible action coming, but that's where I want the Fed, is just out there being data dependent. And they finally beaten that into our heads over years. And that it's turned into a stock picker's market, you know, where the winners, the economy is not great. We don't have a huge tailwind. It's really hard to make the case that the consumer is behaving in a ragingly frothy manner, which we've seen a couple times over the last few years. The travel experience lifestyle things seem to be out of control. But you see Vail coming in tonight. They missed. That's just fine with me because it shows a consumer that's reeling in a little bit. That means two things. It means, one, you know, you're not seeing that raging inflation. You're not seeing it. It's right now we're in a sweet spot in the space I follow for consumer companies where the good ones are able to charge full price and the bad ones can't give it away. That makes it a stock picker's market. And as it happens, I'm a stock picker by profession. So that works out just fine for me. And, you know, I can stay away. You're able to generate returns with good picks rather than just diving in and chasing the FOMO. For me, the NVIDIAs of the world, the headache they cause in my life is that my wife asked me why we don't own NVIDIA about 10 times a week. And, you know, and the terrible answer is I used to, and then sold it because I thought I was a super genius, and then just, you know, did that thing where you don't want to jump back in because, you know, I broke up with my ex and I don't care if she's Miss America now, you know, that was the right decision at the time and I'm sticking with it. So, you know,
does he take a breath, Todd? I mean, does he actually
I love it. Oh God, I miss this so much talking to Jeff.
It'll read great in the transcript.
Yeah, well, I'm going to send it to you because we record the transcript by AI, so it's pretty funny. Hey, Jeff, so I'm a stock picker, but I'm an inflection growth investor. And so it's been sort of fun. It is incredibly intriguing that 5 stocks are now in the QQQ are responsible for 36% of the entire return. In the S&P 500, 7 stocks are 28% of return. So we're obviously a concentrated market. But you know what? I was going to say, I go back so long. I remember when Macke had hair, okay? And
I'm going to call you on that. Yeah, I was the first white man to shave his head. I did this in 1993, baby. People thought I had cancer.
Yeah, right.
I really did.
I know you from about 97, 98. And the, Cisco was up 60x from 1997 to 2000, right? AOL was up 75x. JDS Uniface was up 186x times what it was at $3 in 1993, right? So on a relative basis, all with very little earnings. So reverse that and say that NVIDIA forward is 33. They've already told you for the next 2 years they're sold out. TSM just said that they are sold out because they're trying to meet the need. I mean, I don't think it gets much better than that if you're looking for growth. And I'm going to argue that earnings have been what's driving the market, and not, geez, is it stagflation? Is the Fed going to cut? Is it going to be, that to me is just like talking head bullshit. At the end of the day, those EPS numbers, I mean, we've been long SMCI, thank God for the new house that I'm buying. And the whole deal was that as soon as I went to that ChatGPT thing in November, and you watch people's eyes just like, blow up in 23. And then they said, oh yeah, by the way, we use these SMCI servers, and SMCI is the biggest buyer of NVIDIA chips.
Yeah. But don't you think, but on the earnings side though, Toby, and I gotta go to you on this one too, Jeff. I mean, it's a short-term story. I mean, Lululemon came out, they're up 11% today. Is the stock going to continue to rally over the next couple of weeks?
No, but they're down 80 or 75%. I mean, if you're short and they beat, you have to buy, and the aftermarket closes short out. I mean, that's just a function of beating the market.
But Jeff,
I'm a trap long in Lulu right now, so we can keep it super specific to them. I sold before last quarter just a little bit, just a third, so I'm not thumping my chest. In retrospect, should have sold it all, paid the taxes, sucked it up, and bought NVIDIA. Didn't. But this is in terms of it was so bearish going into the report yesterday that they came out with fairly mediocre numbers, but you still have a company that's growing double digits. The margins are absolutely bonkers, 57% Wow. And they're missing, they kind of, by their own confession, missed a fashion cycle, which happens to good retailers. The truth is that Lulu kind of won. And this is what happens in specialty retail. You typically don't want to own these things forever. Its Gap was a hot company 25 years ago. And it hasn't moved an inch since. It's basically been flat. And that's what winning looks like in specialty. What winning doesn't look like are, pick a dead retailer. You can find plenty of them out there. A lot of them are coming back right now. Abercrombie and Fitch has been one of the best winners I've had in my entire career. People keep calling it a bubble, but it's an earnings story. To Toby's point, the earnings have just exploded. It's a much better company now than they were before. They control inventory better. They got Hollister working. What the hell's not to like? It's not a crazy multiple.
But they reinvented themselves. I mean, Gap actually has brought in this new guy who's pretty, pretty distinguished, I guess, on it.
The Barbie turnaround guy. And
Barbie turnaround guy. Exactly. But fashion, that one is so tough. Now, because he's in Del Mar, I'm sure he's wearing Lululemons right now. But in Scottsdale, when you go into I call it the Trader Joe's Whole Foods deal. If I walk through and shop, and if 3/4 of the women are wearing Lululemons, which is usually the case, then I sort of say to myself, who's left to buy Lululemons? I mean, how many pairs can you have, right?
And they're getting nipped at. That's a $10 billion company now. So I was long them basically on the idea that they could make comfortable fabric for men, because it's 104 degrees right now. I assume you don't want to go outside in wool pants or denim. I assume that you're not going to wear fabric of the Druids right now. You can actually wear breathable clothes that look decent, and that's turned into a great business for Lulu. And men just kind of carrying the story.
Hang on, I'm writing down fashion for Druids. I'm going to steal that. I'm going to put.
There you go.
Jeff Macke said it.
But back to onto the overall market, though, I would say that the monetary policy argument has more power than the earnings argument, because it is a short-term story on the earnings. You're talking about specialty retail. We could talk about tech all day long, the Mag 7, whatever it is. But it does seem that the earnings story does take a back seat to what the Fed is going to do. So the question for you, Jeff, what is the Fed going to do? Are you guys predicting any type of rate cut this year?
I'm predicting that I'm probably going to try to book at least 9 holes of golf during the next Fed presser, and maybe more. It kind of depends on if he's going to do the full conference afterwards. Because honestly, I've just gotten jaded after 30 odd years of this. I went through the Greenspan era. Completely. And if that's me, blah blah, or Jerome Powell, I don't care who's blah blahing. You can probably tune it out. They're going to talk a lot, and again, as long as they're not doing anything radical, I'm not going to fight them either way, and I probably won't even listen to them.
Yeah, Todd, I'd also add that there's a difference in analysts who've been doing it for 10 years versus 30 years. And I was getting a lot of these, oh yeah, we're the Fed's priced in 5 rate cuts, 4 rate cuts into this year. And as we've shared, or I've shared on this show for now a year and a half, come on, man. I mean, the inflation has to really come down to about 10% of the 2% number, or they're not doing squat-ola. And the reason why they're not doing squat-ola is because we borrowed so much money at the Treasury, and if the dollar gets hit, because now all of a sudden you don't believe the Fed, and all of a sudden the dollar, crashes more than it is against it, we're TFU'd. So, we're in a box, and they can do the 90-minute testimonies all day long, but their hands are tied. And finally, we're starting to get, and I would argue that, again, the Fed has nothing to do with the damn thing. It's the 10-year bond. It's the 10-year yield. And at 5%, we had serious problems. We're at 4.29% today. Why did it come down? Well, because people are buying a shit ton of these things. I mean, I know Berkshire owns like 3% of the entire float, but people are buying these. And the missing link I think people have missed about why the economy is so strong is, look at all the interest that, the top 25% are making on their money that are responsible for 78% of discretionary spending. I mean, I get freaking dividend checks and stuff, and I'm like, what? Yeah. So it makes sense that the economy is going to slow, that there is, there's going to be a little high unemployment. If you go to Jeff's state and you have to pay a fast food person $20 an hour plus benefits, I have 2 very close friends who are in the business there, and they've closed down half of their facilities in California because so those people, where are they going to go? So I mean, you're seeing it at the food service and some other areas, but on a whole, the spenders are spending, the boomers are spending. The boomers are carrying this economy like we've done for the last 15, 20 years.
Yeah.
And frankly, the bottom 50% are having a rough time, but on a macroeconomic basis, they mean about that much.
Okay.
And if you need a reason to be optimistic about the AI crap and everything else, where you're actually going to see it in a practical matter is going to be your drive-through. It's going to be at all these restaurants. I know a bunch of people who have fantastic family businesses owning a chain of McDonald's, and just pays off like a slot machine year after year. That's become a much worse business now, because there is no way you can justify a $20 an hour for someone on a startup job. It was never intended as a career.
Would you like fries with that, or onion rings?
And people take that like we're just smug rich assholes making fun of people, but that's not the case.
No,
that's where you learn work ethic. That's where you're 15 and you need a first job. I sent my kid to work at a place called The Butchery. He's slinging stuff. You deal with customers. You learn how to be a human being. That's worth its weight in gold. You don't need $20 an hour, nor should you be paid it. But anyway, that they're going to justify by they'll just have fewer people. And in the meantime, we'll see things like Rubio's local chain. They're going out of business, or at least they're taking them out. Red Lobster, they're dead. But just on the margins, they'll fix that model, and they'll do it through automation. They'll do it through all those jobs will disappear, and now we'll have more of the kind of mainstream media stories with the sad guitar playing in the background about how these jobs just ain't coming back anymore. Where are the days that you had a paper boy and he'd go work at McDonald's part-time? Well, those jobs are gone, and we killed them. So,
I used to be a horseshoe fitter, and now what do I got to do? Yeah. But I'll tell you this, Sweet Green, with the 100% automated salad, these guys, we've owned this stock for a while. They're actually crushing it. My friends in that industry are just saying over and over and over again that it's a salad, and you put it in the robotic cutter, and there's 0 labor costs.
Amazing.
So they're proving Jeff's point that you're taking out these tough, these routine jobs that basically are going to mostly illegal immigrants. Just Put a robot in.
As
There
it
you
turns out,
go.
capitalism works super well too.
Yeah,
And
really
if you get
does.
tired of listening to Starbucks bitch about the price of their labor, listen to a Dutch Bros call. There's not a single thing I like about Dutch Bros other than the stock and other than the earnings growth. Do I like Dutch Bros as a name? Nope. Do I like Broistas as a title for your workers? I think it's ludicrous. Do I want to drink a 900 calorie freaking grenadine flavored coffee drink? Nope. But man, that's a great company just doing huge things and taking incredible amounts of market share from Starbucks. And so I can work with that environment. And also in terms of my fears for capitalism, maybe we don't need 20,000 Starbucks in America. Maybe that's just a possible thing.
Maybe.
Jeff, I could not agree more. We have a Dutch Brothers just up the street. And
Yeah.
I've seen it time and time again, right after 3 o'clock, between 2 o'clock, when construction workers get off, packed. They have to give them their own lane. They have to put cones out on freaking Scottsdale Boulevard because the cars are backed up so much.
Which is glorious.
Go by a Starbucks at 3 o'clock, and there's a lonely guy playing mandolin somewhere. I mean,
if you want an anecdotal measure for how a consumer company is doing, my old man used to run Target, and every Christmas, if they didn't have to have traffic police, he would actually throw a tantrum. He would just be like, it's too easy for people to park. We don't have enough energy in this store. This is garbage. So you're exactly right. The fact that Dutch Bros creates a nightly traffic problem, that's the kind of thing that, not to go all Peter Lynch, but you better pay attention to this that kind of lines.
Yeah, no doubt about it. Listen, guys, let's close it out on that block, because coming up next, we got to ask Jeff about this Bank of America report. Fragility. It's the hottest word on Wall Street today. Everybody's talking about it, but we're going to explain that after the break. And we also have to break down even more of the retail side. Jeff Macke is the OG of retail. He's going to tell you all about it and which stocks to keep an eye on and ones you might want to stay away from. But listen, with us today, Jeff Macke. He is the partner of Wall Street Beats, and we'll be right back after the break. Please stay with us. All right.
Buy, hold, sell, brought to you by Crosscheck Management.
Ready to up your game and learn more about the thrilling world of sports betting? Introducing Double Down with Breslow, the ultimate podcast about the business of sports gambling. Join me, James Breslow, and a long list of expert guests as we dive into the art and science of the sports betting industry. Evolving regulations, technology enhancements, and the meteoric rise in the number of players makes this sector the fastest growing and most intriguing in the world. Unlock the business secrets from many of the industry's most recognizable C-suite executives, including famous odds makers and influencers. Every episode of Double Down with Breslow is packed with insider tips, deeply skilled analysis, and in-depth discussions. Don't miss out on the ultimate resource for mastering the business of sports betting. Listen to Double Down with Breslow on the Evergreen Podcast Network or wherever you listen to podcasts. That's Double Down with Breslow, the business of sports betting podcast.
Welcome back to Buy, Hold, Sell. Well, with us today is Jeff Macke. He is the partner of Wall Street Beats. You can go to wallstreetbeats.com. We'll learn a little bit more about all of that later on. But I got to start off with you, Jeff, on this. We had a Bank of America report that came out, started talking about fragility shocks. And it's a pearl clutcher as far as I'm concerned. But of course, you said that historically that's a bullish signal, but that's a whole other topic. But what do you think right now? Is this a concern that investors should be focused on?
I think I read this exact same report almost verbatim in May of 2021 rather, from Bank of America, as it turns out, who was concerned about the fragility of markets because they were being carried by these too few stocks and they were worried about some sort of correlation. Let me tell you where all the stocks trade exactly like in a bear market. If you're down 5,000 points on the Dow, every single stock in your portfolio is going to be down. Correlation will equal 1. In a real market, in a real place, that's a slightly expensive market. So you know what? If you miss earnings, you're going to get beaten. You're going to get taken to the woodshed. And that's kind of what deserves to happen. That's sort of a rational response to this fragility argument. Doesn't make any sense. By the way, from the time that they published that report, Bank of America in 2021, May, they saw double-digit returns into the end of the year. So, I think they're selling publishing reports is what they're doing. It sounds good.
I think, fragility, first off, has to be the lamest term I've ever heard for the stock market. I mean, now, obviously, the top 10 stocks by market cap in a market cap weighted world are going to be 35 or 40%. But on the other hand, dude, if you have $500 billion in 2 and 4 year bonds, and you're generating EPS of like 18 to 25 cents just from your freaking interest, and you don't need to borrow a dime. Why would that company that's still growing earnings 10, 15, 20%, or NVIDIA, of course, obviously off the chart, why would they not lead the market? What should lead the market? Red Lobster, because it's on sale, it's a value. Jeff, I believe, is like me, is that we just ate the value investors' lunch for decades. Yeah. The earnings per, if you look at the net asset value and so on and so forth, come on, man, it's a market cap weighted market. And when interest rates are at 5% or they were at 0, you value guys sucked. Now they went up to 5%. You value guys sucked. The smartest value guy in the world owns Berkshire. As soon as he buys a company, the value that they paid for it gets marked up 50% by the Berkshire Hathaway premium. So yeah, it worked for him. Mm-hmm. But in a competitive world where you have market cap indexes that literally own almost 31% of the entire freaking market. Bob Olson, remember Bob Olson, Mac, we'd have him on Bulls and Bears. And and I remember looking him in the eye in 2007 when we had made a call about how rough the mortgage thing was going to be. And he said, Toby, I can't wait, man. I want to be able to buy these banks, at half of their net asset value. And then they went down to 90% less than their net asset value. Yeah. He lost 2 mutual funds. He lost a lot of managed. Yeah. Show me the value, guys. It's worked, and I can count them on those many hands.
That's a report for people who missed NVIDIA. So you missed NVIDIA, and you're like, don't worry, it's all going to come back to where it was. There are plenty of ways to make money in this market, and until that's not the case, again, I own Costco, I own Walmart. I have a hard time bitching that much, or frankly, generating much sympathy from other people, right? Because these things are doing fine. It's Walmart's the top stock in the Dow's up 26% this year. I'm glad for the AI gains. That's terrific, but I'll take the companies that's growing margins. They've got a huge competitive moat, and they're generating more cash than they ever have in the history of the company, which is quite a bit.
And they just had that all-time high.
They both closed at all-time highs literally today. So, it's fragile market this, buddy.
I'm with you, brother. I'm with you. I'm a Costco guy. I'm a Walmart guy because of the top 25% and also the bottom 50% that I call it the deflation, the household deflation trade, that now you're not going to go down to get your food at Whole Foods. You're going to go to Costco. You're going to go to Walmart. Although the Walmart we have, I believe, is like 500,000 square feet. I got lost in it like 3 weeks ago looking for something. I was like, hello, is anybody a customer on aisle 65?
Yeah. If you're worried about a fragile market, honestly, hitch up your trousers and do a little homework. Because it's you go into Walmart and you go into Costco. The reason they're at all-time highs is because they've managed to build a moat and they've created a competitive gap between themselves and the rest of the retailers. They're generating billions of dollars where other ones aren't.
So let's talk about that, because I want to talk about retail. Jeff, as long as I've known you, you are the retail guy. You're the subject matter expert. You know everything about this space, and you can even speak on the health of the American consumer. But let's talk about Walmart and Target, the 2 big box competitors. Walmart is having so much success, but on Target's side, they had so many inventory issues. The stock took a beating. It is around close to 150 at this point, still far away from its all-time high. But what do you think? If I was picking one of the two, am I buying both, or am I just buying Walmart?
Well, I own Target as well, which is not part of the I'm bragging about them triumvirate. I would love it to be. I would love to say Walmart, Cost, and Target, or all 3. And here's what the difference is that what Costco's done, obviously, with their membership program, what Walmart's doing with their advertising, with their membership program, their own membership program, they're creating a moat. You're talking about 6% bottom line businesses, meaning for every dollar you spend there, they make 6 cents. So if they can bump that up to 7 cents with some high margin ad work, they're just going to be generating more cash than the rest of the retailers. Target's still a work in progress. Remember, 12 months ago, they managed to tick off pretty much everyone on every side of any political fence, with their celebration of pride and everything else. Now, I'm an apolitical beast by nature unless it can make me money. And what I think from the money-making perspective is Target's going to have better sales this quarter than they did a year ago because they're not on the front page of my newspaper this year. They can run a clean playing field. And I think they'll figure it out. I think the Target Circle Club is going to start generating cash for them. And what I really think are that the discounters that can't separate themselves in that way, meaning they don't have some special sauce, they haven't figured out a way to become true omni-channel retailers, which is a gross catchphrase that will die a miserable death because it should just mean retailers. But you look at a company like Dick's Sporting Goods, incredible story. They take a fairly good mix of their orders that are pre-orders and also people coming into the store. They've got a nice different every quarter people come in because it's a new season for their kid and you want to try stuff on. Well, that's a nice moat. You can't buy all your sporting goods stores at Amazon every quarter. You're going to have to go there. You go down to Dick's and they sell you a ton of stuff. They've created a raison d'etre to exist. Whereas, Hibbett Sport, I know I'm dropping some fancy terms.
Je vous en prie.
Oui. They've got that je ne sais quoi.
He's got his load right there. That's it. That's all the French you know.
I pretty much am. That is. I have a hard enough time with Spanish. But, the point is that they've got a reason to exist. And that's the kind of environment we're in. We're in the have and have-nots. You would think that if you kind of divided it demographically, and if that was really just what we were getting at, McDonald's wouldn't be one of the worst companies in the Dow. And yet there you are, Walmart's at the top, McDonald's at the bottom. And if you listen to kind of punditry out there, they'll explain that Walmart appeals to low-end consumers and that's why they're winning. Well, so does McDonald's, but they just haven't figured out a way to kind of deal with the macro environment that they're wrestling with. And so they're not executing. Again, hitch up your pants, do some research and figure out how these companies actually make their money. You'll figure out pretty much who the winners and losers are.
Todd, I would just add that I learned this, Costco was founded in San Diego years ago, and he was called the Cost Club or whatever the heck it was. But when we met the owners, at the investment bank I worked at, they said, here's the one thing that people don't understand what we're doing. You realize that there's stuff that we sell, we mark it up, and then we have employees and we pay them. But we sell a membership. And that is 95% incremental profit margin to our business. We have to pay the Visa, MasterCard fee, whatever it is, and somebody paid for it. But, and the reciprocity or the stickiness in some years is 98%. I mean, the only time anybody stops paying their Costco thing is either they die or, they lost their job and moved someplace where there wasn't a Costco. So I love incremental margin. To your point, I love this 95% incremental profit margin, and all you do is ding their credit card. Oh my gosh! And
add that as a special sauce on a business that makes 6% net margins. I mean, holy crap! It's nice fat couple dollars that comes down and just goes straight to the bottom line. Unlike everything else that you buy. At best, they're going to make 30-40% on the products, and 98% on the actual cards. All day, baby. Buy it all day.
Jeff, what about the theft on the retail side? You have companies like Target that are talking about locking everything up, where their workers are going to have to unlock doors just to have shoppers take what they want. I mean, it's got to be having an impact, right? I mean, you hear the analyst reports, but Target talked about it a couple of quarters ago of its impact. But do you see it across the board for all retailers? Is this a concern that everyone needs to be aware of?
Probably 2 years ago. Right now, it's a second half tailwind is what it is. It was partially kind of a self-inflicted wound by a lot of these retailers. We talked about Target just now, and so we'll stick with them. The self-checks. Self-check was just the most dumbass idea in the history of the world. You took the Target cashier, literally beloved, literally iconic. It's a Saturday Night Live character that people actually like.
And now she's doing the ads. I just love it.
Right. I mean, and freaking who doesn't like things? I like you found a good value there. Well, that's a pretty good job. I just bought one of those T-shirts for myself. That's a nice job. You're a savvy shopper. Who doesn't like that? Who likes going to the ATM by alternative? So the self-check is basically just an ATM that works about half the time. And you've kind of managed to take customers off enough that they feel justified stealing. So that's going to take care of part of their shrink. Another part of their shrink is just an actual kind of snapback from the COVID days when you just could raid stores. You're also kind of eliminating. Best Buy is still wrestling with this, where their stores are mostly just displays now, because you could just steal so much there that they can't really put the big boxes on their front lines. But it's a problem that corrects itself. But as it kind of does, what was a huge hit to earnings, because there's shrink is a real problem. It was a real problem, still is. But it's more the direction of the problem than it is the actual kind of weight of it. And right now that's moving in the right way. They've managed to kind of crack down a little bit. They brought the cashiers back, creates a better vibe in the store. It makes people want to steal less, and it makes it harder just to steal things in the first place. So that is a double whammy.
Yeah, I'd add that if you look at the shrink at Walgreens and in CVS, in the old days, it would just be razor blades were behind the plastic case. Now in my local CVS, everything that costs more than $10 is in a plastic, plastic you have to get loose.
And or their shelves are bare. They
right.
just don't carry it. We're not going to carry toothbrushes because holy crap, people just steal them by the dozen and we can't handle it. Again, it's capitalism is always fluid. And if you're going to sit there with the same box and we're done with the days that you can just kind of put expensive things out there for people to see. I regret the loss of those days. But then again, I'm not going to invest in a company on nostalgia. I'm going to invest in the guys that figure out how to solve the problem.
Right. So what are your favorites, though? I mean, you had just yesterday, Lululemon popped today off of the earnings report, Five Below, crumbled, I think, 5% on the day. Do you have any real clear-cut retail favorites out there that you could share with us?
Sticking with winners, man. Just stick with the guys who have it figured out. Dick's is probably one of my favorite companies right now, because people hate sporting goods just by the nature of it. They low margin, no one wants to go there. No, it's why can't I do it on Amazon? Well,
right.
And a lot of that, that was true again 5 years ago. But right now, club fitting, as it turns out, is a big hairy deal. So Golf Galaxy, which Dick's Sporting Goods bought years ago, wrote down to almost nothing. All of a sudden now they have golf club fitting. Well, turns out that's actually now. Is the golf industry growing gangbusters? Absolutely not, but it's growing about GDP, and they sell the niche that you want to be selling in. We talked about kids having to go in before. That's just a business model that you're at 15 times earnings. The stock goes parabolic. People think it's expensive. It's really not. It's just sort of a sporting goods company. I mean, do I feel a little trapped in Costco? Again, this is a discounter, basically club store, selling at 50 times earnings. I don't think it's the investment of all time right now, but pry it from my cold, dead hands in terms of selling it. So, stick with winners, avoid, I'm still long Lulu, but I'm just kind of trapped there. I don't, they're going to grow into their multiple. They're doing a great job executing. It's still an expensive company, and I don't need to fight specialty that much. Just the guys that are winning, just stay there until they lose the momentum and then get the hell out of Dodge.
And let's remember that the average new set of golf clubs, not that I know this, is about $2,200.
Wow.
If you don't get fit, you're an idiot. I mean, honestly, guys, I spent an hour and a half down at our golf club fitting machine, the whole thing. Then I went to Golf Galaxy and did some other clubs they didn't have. You're totally right, Mac, in terms of, dude, it's a baseball mitt. I need to wear the baseball mitt. I need to, the shirt. I want to see that it fits.
Yeah.
I buy golf balls on Amazon. Golf balls are a commodity, but stuff where you're spending money on that is personal to your game or your style or your look.
Yeah. Hey, I'm just curious, what's that cost anyway? I'm not a golfer. I'm just curious. Like, if I had a set of clubs.
If you buy a set of clubs, it doesn't cost you anything. But if you just want to go in and get fit, it's $75 to $125, depending on. I mean, it's an hour and a half. You got to
75, 125. You got to put up with the hurdle of some guy watching you swing, which is a little embarrassing. But you know what makes golf more fun? Not sucking. Sucking makes golf a lot more fun. And so
I'm writing that down too, Mackie.
Yeah. There's a science to this.
More fun.
I was a psych major, and I promise that doing something well is much more repetitive. It'll create a habit much more than just stinking and self-loathing that you see most golfers going through.
Very, very well said. Jeff, before we close out the show, give us a little bit about Wall Street Beats. What's the story? I mean, what can the audience look for when they go to wallstreetbeats.com?
Listen, every morning we do the call with me, Herb Greenberg, assorted other smart people who also add value, but we're just exchanging ideas, and we're forging good ideas in the kiln of intellectual debate, of a little argument, a little heat, not for the purpose of argument, but just because that's how you get the best ideas, you get the best conclusions as someone challenges your beliefs. And so we're just exchanging ideas and talking about what the news is that day in a professional, informed manner, 20, 25 minutes. And it's we're going to kind of generate returns that people haven't thought of, give them ideas. And that's idea flow is the coin of the universe, man. That's the coin of the realm. It's if you don't have idea flow, you're not even starting. You can't even.
And can people subscribe to it? But can they also get the transcript if they missed it, or is it only just audio visual?
I'm sure they can get the transcript. They can have it however they want. Make us an offer, Tobin. But
I don't know. You may have been a psychology major, but I think you're an English and a history major too, Jeffrey. I really
like to dabble. I'm a dabbler.
There you go. Absolutely. Well, Dartmouth is very proud. That's for sure. So listen, Jeff, you said it all today.
It's Dartmouth. Everybody knows it's Dartmouth.
That's it. What a wonderful guest. Jeff, we got to have you back on Buy, Hold, Sell. We loved having you. Everything you had to say. I know the audience is going to get a lot out of it, and we really do appreciate you being with us today.
It was absolutely my pleasure, guys.
Absolutely. So on behalf of Jeff Macke and Tobin Smith, I am Todd Schoenberger. Thank you once again for joining us today on Buy, Hold, Sell. We'll catch you next time. Take care.
Buy, Hold, Sell, brought to you by Crosscheck Management.
I want you to smash that like button.